Welcome to the Twomey Stock Market Report. Today is February 8th, 2023, and I want to give you a quick market update because a lot is changed and the market is starting to give us some directional signals. So let's take a look at what we want to talk about. First of all, if you want more detail, you want to read the latest market report, go to the website, the number 2mestocks.com, and there you'll see the tab for the newsletter. Take that, read that. It'll give you even more detail and insight on fundamentally and technically on what we're doing with the market. All right, so what are we going to see? The market had tested its highs, and that's something that we had predicted and we knew it was coming. And unfortunately, yesterday would have been a day after the Fed came out and really basically reiterated that inflation, yes, it's getting tamer, but we're going to have to stay at these rates for some time, which is something we've been discussing for some time. And the markets took that initially 50-50, and then they raced off at the close. Then today, the complete opposite. One of the Fed's bankers came out and said that, hey, we may have to even increase rates more than we thought of, but more importantly, we're going to definitely have to keep them elevated for some time because there's just no end in sight of the core inflation coming down. So what's the direction? Where are we headed, the RSI, and how we're going to trade? So let's take a look. I want to go first to the advanced decline for today. A couple of things, as you know, I talk about this. I try to get this for more breadth of the market. New York Stock Exchange is quite a few stocks that this tracks. And this is the daily view. As you can tell, we did hit that peak. Last time we hit the peak was the bear market in August, and we came down and retested the lows twice and made new lows, actually. Well, we did get up to a high. We expected some pullback because the RSI was up in the mid 70s. And last time we were up in the low 70s to mid 70s. The market came racing back down. So we said, well, we're probably going to see some impact on the overbought situation. A lot of people raced early into the stocks. The good news about this, it was a breadth of stocks. We had 71% trading above their 200 EMA. And then we look down here. This is the exponential average. The 50 now has crossed positive above the 200. And that hasn't happened since, it was negative all year long, 2022 for the most part of it. And that tells us that, again, the breadth of the market's there, more stocks trading at the higher rates, the 50 cross over the 200. These are longer duration. The 50 tells you, hey, that's what traders are doing short term. Well, they're advancing. The 200 says, hey, long term, where traders have been. Well, they have been negative, and at this point, more positive than negative as the short term starts to expand and bleeds into the longer term 200 EMA. If we look down here, the MACD is starting to turn down. That is a stronger, longer oscillator for trend momentum, oscillator that we use. And it takes quite a bit of time for it to cross above zero. And usually once it does, it stays up there for some time. And, prices will vacillate. And we did see that peaking a little bit. For now, we're still in a positive. It hasn't crossed below the red, but it may if we continue to see this dropping. So I want to take a look real quick at the charts. So let's go to XLK, which we kind of use for the NASDAQ QQQ. It's a QQQ. It's what we trade for the technical indice. Very narrow trading range, right? The RSI got up into the definitely higher levels, 68, 69, and we, abruptly started, seeing our sell-off. Yesterday, we probably should have had a sell-off based on some of the news that the Fed came out with, but it did not happen, which was very, very good for the market. The volumes are starting to wane. You can see these are my volume bars down here. They've been pretty robust, but they are starting to wane a little bit, and we had a big sell-off today. But if you look, we're still in this very narrow Twomey trend track line, right? So we're still within that period there of up and down. That's where we should vacillate over the short-term trading. We have our 9, which is the black. We have the 14, which is the orange or red, and then we have the 20-day below that, and then we have the 50 in the blue, and then the blue and the 200, and then the 50 EMA. Well, usually our first line of defense is that 9 and 14 EMA, and that's where we start to take profits if we had a longer trend, which we have, experienced here. And we usually take a third off and, say, hey, we can. It's easier to get into a market that's advancing if you miss a few points. That's not so bad. But when the market drops, it drops like 3, 4, 5%, and a lot of it's overnight. So we're seeing the retreat. We expected to retreat. The question is, how far will it come back? It should get down into around this 14 EMA. That brings, we close at 141. 142.96. That brings it down to about 138. We did alert our subscribers to put a bid in for XLK. We do anticipate, based on what we've seen and the breadth of the market, the RSI, and if you go to the market report that's on the website, the number 2mestocks.com, we go into the plethora of things that tell us about the economy and what we think fundamentally, the health and breadth. Our belief, the premise that we're starting to develop is this: inflation is here for a longer period of time. Yes, it may month over month look like it's declining, but the net of it is still up around 6, 7, 8%. And depending on what, is it a capital goods or is it a carton of eggs? You can see, some are up 20%, some are up 30, some are up less. Anyways, the bottom line is, the Fed may go another 0.25 and another 0.25. Even if it goes up a little bit higher than that, inflation is not coming down. The supply side of the economic fundamentals does not exist. We are stimulating a company. The stimulus to the economy is coming from the flooding of dollars from the government, free money that's being printed. That's inflationary. Number two, it keeps people elevated into jobs that they probably normally wouldn't have because they're bought for jobs. And then once that stimulus goes away, those jobs don't turn into anything productive. So short term, very good. Long term, inflationary. And then on top of that, if we have to keep rates elevated for some time, all those extra costs and borrowing are going to translate to the economy. But more of a stagflation situation versus a recession is what our premise is starting to develop. And then if we look at the diamonds, which, you would think that'd be a more safer place to park your money. What happened ever since we crossed above that 200, the 50 crossed over to 200? Basically sideways. That's okay. I'd rather be in a sideways than a dramatically downturn market. And that as well took a little bit of hit today, but not as much. That's very indicative of more of these 30 high industrial type stocks. We look at the SPY. The SPY is our S&P proxy. And again, narrow trading range. It's that whole area started to expand. We've got the cone widening a little bit. See, as we've had some highs, but it hasn't been able to hold that up. That was an RSI, I think, of pretty high, if I recollect. It was 69, and now it's abated down to what? 59. Big difference. So what am I saying? If the RSI can get down like the Dow into the 50s, and the trading vehicles, or the pricing, we should say, goes sideways or drops a little bit, but stays above our short-term indicators, including the 50, which is our first line of defense, we're going to say this market is much more buoyant. And that's what right now, that's what the markets are telling us. The next few days, downturns are downdraft is expected. We've kind of hit a short-term topping here. We do need the markets to kind of accept that, adopt that, and understand that. Going sideways would be very favorable. We do not want a major downturn, and we're going to have to look towards, our 50 and 200 EMAs as probably where it would start to rebound and start adding more prices returning. That's our premise. So that's what we're talking about today at the Twomey Stock Market Report. So how do you handle that trade-wise? If you have good trades, especially in the high-tech sector, tighten those stops, take a third profit. If it races up, and you can always get back in, but if it drops down the next several days to next week, you're going to protect those profits. If we have a cataclysmic drop, you'll have preserved quite a bit. So tighten all those stops on those high tech. On the more defensive stocks and the more value stocks, which we took a lot of dividend plays, value plays, and those we've kind of allowed the stops to run a little bit so that we expect those to go sideways and the dividends will help pay for the holding of those over time. And again, you can get that from the number 2 emmystocks.com. Let's see, what else did I want to cover quickly? TLT. Yields kind of started going sideways. And now they've once again indicate, and usually if the TLT, we'll go over it, go over my weekend report video and it explains more detail, but this should be rising if we kind of see a recessionary, what's happening, it's dropping. We look like we're just about ready to enter a sell signal. We did alert subscribers on how to handle that. We did sell out of it. And we look at TBT, which is the inverse of that, but it's the 200%. So it's a little more dramatic. And we're getting a buy signal there. It's popping up against the 50. If yields start to rise, that's telling you the Fed has a lot more work to raise rates, and they're going to stay there for a longer time. And this pretty much, if TBT starts to take off, TLT starts to falter or go sideways, that pretty much cements the thought, high rates for a longer period of time. We might have a nice run up the first quarter of 2023, and after that we expect a stagflationary premise to start develop. I'm James Twomey. This is the Twomey Stock Market Report. Today is, February 8th, and we are just updating you. Any questions, email me at the number 2 emmystocks.com. I'll get right back to you. And then, what we're seeing out there, people are just, hey, everybody's raced into the market. Protect those profits. Thank you.